Hello, sense of things. It's Jeff and Ron here once again with another weekly update of what's going on in the world. Ron, how you doing, buddy?
Good morning. Good morning. Yes, never a dull moment in the markets and the economy and geopolitics and domestic politics. And just keep away from social media and you'll be healthy.
Yeah, I put myself on a December social media diet where I didn't really look at social media for a month, and amazingly, I am no worse off for wear at this
Oh
point.
God.
The only
Yeah,
thing
it's
it
only going to
hurt
get
me was
worse
the
as we
my
get
cat videos.
as we get into the spring and summer. It's only going to get worse.
Oh, I
Even
know.
LinkedIn, they got to control that. I don't want to see that crap on LinkedIn, but we'll see what happens.
Yeah, I mean, I think LinkedIn's picking up a little bit more as a social media platform, but it's still probably 10 years behind everybody else at this point.
Uh, we'll have to see. All right,
Well,
you want
what
to
do we
dig
want
right in
to
here?
lead off with today?
All right. So everybody knows we just had a Fed meeting this past Wednesday and the 31st. And one of my favorite things, Jeff, is just to rail against economists. Because look, we know the market is manipulated. We know there's big money behind the curtain pushing things around. And last year, in a comical way, starting in April, May, when we started the podcast. Oh, there's going to be one or two rate cuts in the second half of the year, probably Q4, anticipating probably something bad was going to happen. And we saw things starting in August, September, and October, and then we saw that literally historical run from the
Yeah.
end of October till January. And what happened? Did we get a rate cut in November, December?
Nope.
No. Here, if we look at December 29th, they were predicting up to 6 rate cuts in 2024, with the first rate cut in December, a 73.4% chance rate cut in December, right after the Fed announced we're not going to do anything in January, and most probably they don't foresee anything happening in March. It now went down a month later to 36.4%. What changed other than Fed speak? And
Yeah.
here's my other favorite thing. Sorry for the rant, but here we go. What has the Fed and the Fed governors been saying for the last 12 to 18 months? Higher for longer, right? As long as unemployment stays strong and the consumer is resilient, why would they lower rates? There's
Mm-hmm.
no reason
Yeah.
for them to lower rates. Higher for longer. That's been the mantra. But then you get the talking heads, the pundits, all the business media has to talk about something. Lowering rates. When are they going to lower rates? Talking about in October, November, pivoting and all that other BS. Here we are 2 days later after they announced probably no rate cuts in March. Now, mind you, a month ago it was 73.4%. Right after the Fed announcement, it was 36.4 to lower it. So as of this morning, I had to do this, right? 19.5% of a possible rate cut in March. What changed in the economy? What changed in the markets? Zero.
Yes.
Nothing changed. Market manipulation, folks. Sorry it happens. It's out there. The speculators, the big fund managers, the venture capitalists, the hedge funds, the private equity, right? They're all, look, you're just the sailboat and they're the wind in the sail and they're pushing you around. And this is where we are. So wipe out all the noise, right? Put earplugs in, but you don't need to worry about this. Nothing to see here. Nothing to see here. They're trying to create fireworks for you to look at. Nothing to see here. So, what are your thoughts? I'll just shut up for a minute.
No, I feel the same way. It's just the more I guess I stepped back a little bit from, I typically don't watch much of the pundits on TV. I listen in the car just to keep myself abreast of what's going on. My routine every day is three things. I go to briefing.com and I look at what the earnings reports are, what the economic reports are going to be on the calendar. I go to Investors Business Daily and I check out the what's going on in the market
Yeah.
and their take on things. And I just honestly stopped watching the CNBCs of the world, the Fox Business. I watch one show on Fox Business, which is Charles's show, Charles
Yeah,
Payne's show in the afternoon,
very
because
good.
he's probably the most rational person I've seen in the markets. And even he will tell you that things are manipulated. And so we just don't, I just don't want to even play anymore. I've got to that point where I'm like, I
Yeah,
don't want
yeah,
to
you
play
can't
anymore.
have an investing thesis, an investing mantra, if all you're going to do is try and consume economic data
Yeah.
and all this other information, because it's a loser's game.
Yeah.
It's fool's gold.
And once again, with these guys with the earnings or the interest rate cut, okay, so we could have a potential chance of one in March. Why would they lower it? There's no reason. There's absolutely no reason that they would lower it. And it was funny today. I heard that, like I said, I was walking past the thing, and oh, the earnings or the economics look good because we've got a good jobs report. Okay, it's one jobs report, and two, why would you think, okay, so it's great. Why would you think that we're going to lower interest rates because of
And
that? It's
just to
going to
let you
hold them.
know, the Fed futures is showing better than a 50% chance of still six rate cuts this year
Yeah.
between now and the end of the year, throwing out March.
Yep.
Throwing out March. It's still showing more than at least a 50% chance of a rate cut for six more times this year. Well,
Yeah.
I'm looking at 1 to 2, but in the second half of the year, when something breaks,
Yeah.
so we'll see what happens there.
Yeah. And once again, we've still got, we've got a whole year of politics ahead. I just saw something this morning. It's 9 months away from the election. And I'm like, oh God, what can happen in 9 months?
I don't know, but you better put on your suit of armor.
Yeah, absolutely. It's just, I pretty much hate politics, but oh my God, it's just going to be a crap show coming
Yeah.
up for the rest of this year. So
And you know what? It's a blood sport. It's an
it is.
absolute blood sport.
It
I
is.
find it to be very interesting to take a quick right turn and then come back. I don't know if we talked about this or I went on a rant once before, but I find it very interesting. All the media outlets, TV stations, whatever, in order for them to take on commercials, right? Commercial funds, they have to vet out the company. They have to make sure that the product and services that they're offering, that what they're trying to state is true. It's not embellished, it's not elaborated, whatever. They have to vet those out, except for political ads. They can say anything they want. They can say anything they want. They'll take the money and put it on the air.
Yep.
And people are sheep. They're gonna listen to it and follow it, and it's crazy on both sides.
Interesting
That's
though.
why it's going to be a tough election
Yeah.
season.
It's an interesting thing though. I ran a couple of my friends' social media campaigns that were running for like local office, and the hurdles we had to go through with social media to get approved to be on there for political ads and stuff like that. It's like massively huge. And then once you're a made man. Once you're in, they don't monkey with it at all. We had no problems at all. Not like we
Yeah,
were
yeah.
not
They
we're,
probably have some censorship on it, on extreme things,
I'm
but for the most
sure.
part, you could say that person was responsible for the Kennedy assassination, and they'll let it go.
Yeah, absolutely. Like I said, there is nothing when it comes to that. But then other times it's, this person said such and okay, we're banning them from Facebook for life. Okay, why? Why do we not have, or are we allowed to have discourse at this point? It's just you've got people that are making decisions that I just don't understand the decisions that they make sometimes when it comes to who they censor and who they don't.
No, I hear you. Okay, now we are moving on to trade school.
All right.
So trying to understand trailing stops, and this is something we've been applying for many years. And while the market is at a top, and while we see that the ground is a little shaky, that the market is standing on and structurally on, how do you maximize your profit? So we're going to keep it simple initially, talk about what a 10% trail stop is.
Mm.
So if the current price of your stock is $20, you put in a 10% trail stop. That means if the stock goes below $18, you're out,
Mm.
right? So
Yep.
you own 1,000 shares of ABCD stock. At $20, it goes to 18, you're out. You're down $2. But let's say the stock moves up to 25. Your trail stop moves up again 10% to
Mhm.
now 22.50. So you're now up $5, but you wanted to maximize your profits and you didn't want to lose more than 10% at its current level. So if the stock drops to 22.50, you're out and you make $2.50 per share on that particular trade.
Mhm.
Now the stock moves up to 30. Your trail stop now moves up to 27. If the market pulls back or whipsaws, and let's say it whipsaws down to 28, you're not out. The stock moves back up again, you're still in the black. You still have margin in there, but now the stock whipsaws down to 27. You're
Mhm.
out at 27. You've made $7 per share. So
Yeah.
this is basically a beginner intermediate understanding of how a trail stop could work for you. Do you put this on every position? You wouldn't put it on fixed income positions
No.
necessarily, but you certainly may put it on some of your high flyers.
Mhm.
Obviously, if it's a taxable account, an investment brokerage account that you're in, if you're out, and you have a profit, you're going to have a tax consequence. So you need to think about how much you want to do it. So if you have 1,000 share position, maybe you just want to say, I'm out on 500 shares at 10%. You still want to hold your position because you don't want a large tax consequence. So now let's get to the next step and let's get into a little bit more advanced. So what you can actually do here is that let's say you have 1,000 share position. You want to basically, you're not going to get a top tick on this, but you want some out at 5%, you want some out at 10%, and you want some out at 15%. This is something to consider. So let's say again, you bought it at 20. It went all the way up to 30, and you're like, wow, I think we may be at the tip of the iceberg here. How do you protect your profits, right? 5% trail stop on 250, 10% at 250, and then you're out if it goes down to 15% on the final 500, and you've maximized your profits as much as you can on this position. So the purpose of the strategy is you'll have no more than a 15% stop, but you've maximized it on the way down. And let's say you're out at 5%, right? You're out at
Mhm.
28.50, but now the market goes back up again to 35. You're still in on your other 750 shares
Mhm.
and go from there. And my last point is the old adage is bulls and bears in the market make money, pigs get slaughtered.
Yep.
So if you think, oh, I'm going to top tick this thing all the way up, hey, you shouldn't be the one in charge of your account, and you
Yeah.
shouldn't be the one in charge of your strategy. Do you do something similar?
Yeah,
How do
we
you
do.
apply it?
I typically only do it on our individual securities because those can be the ETFs. Typically, they're not going to have big moves in any given day, and it's easy for us to manage those positions. But on the high flyer individual securities that we have, we'll put trailing stops on it just for the simple fact I can't sit here and watch everything every minute of the day. It's just too much work and it's just impossible to do from an individual account manager's perspective. This is a great way to just simplify the process. We also
And
do
set
this a
it and
little
forget
bit.
it.
Yeah, it's set and forget. We also do this on some of what I call the income machine, which is our some of the securities that we have that are real high dividend payers, which typically they don't move much. The only time they really move is if there's some kind of an update to the dividend where they're going to reduce the dividend.
Okay.
And I do having trailings on those because something could happen and it moves and I want to be make sure we're out of it. Then we can reevaluate that position and see, do we want to go back in at the current new dividend rate?
Now, I
Um,
was asked this by a client. You cannot do this to mutual funds.
nope.
Maybe there's a custodian out there that does it, but I know the couple of custodians that we use
Mm,
can't. Why is that the case? Because the mutual fund settles at the end of the day.
yep.
So if you get a 15% pullback and you have a 10% trail stop, you're not going to get taken out at 10% on a mutual fund.
No.
So you can't use trailing stops on a mutual fund. You can do it on an equity stock, an ETF, and you can do it on a preferred stock.
And basically, it's an order that's put in through the broker onto the systems that sit out there. Now, I will say there is one little caveat that I place to this. I do not do these at like specific price, like 27. I will do it as an exact 10% on the drop side. The reason for that is there tends to be like these little price ranges that are there that, once again, market manipulation can push it down to that point and then sell you out, and then the thing can pop right back up. And I've seen that happen, and it just annoys the living tar out of me when they see small orders sitting out there, and there's like a whole bunch of small orders out there at a specific kind of price, and somebody will manipulate the market down enough to pop it and sell off those things, and then the stock goes back up. So I tend to do them at really oddball prices and stuff like that, so that I'm not in with the rest of the crowd on the quote system.
And again, this isn't for everybody.
Nope.
If you're a long-term investor and you got 20 or 25-year horizon line and high quality stuff, this isn't really for you. If this is in a position that you're like, hey, look, going to need the cash, want to go more conservative, I want to be able to maximize profits on the upside, this is a perfect way to put it on a select position.
Yep. Yeah, totally agree. And it's, once again, it's stuff that I don't want to have to manage all those positions that way either. So we do it on things that are, especially if a client brings in. I've got a lot of clients that have Apple stock because they've gotten it through work. And we use this heavily with those large stock positions just to make sure that they don't get pounded down too far, because in some cases they may have a pretty big reversal, but then they still have a big capital gain at that point. So you want to, that's an instance where I would do that kind of multiple trailing stop orders down so that we're selling pieces off as we go.
And the other way to look at it is this way. Let's say you got 10 positions in your account or portfolio, and one position is just outsized, right? It's now like 30, 35% of your overall portfolio. You want to reallocate, but you're like, wait a minute, it's still in trend here. So put a 5 or 10% trail stop on 20, 30% of it, because you want to reallocate that money to something else, but you don't want to get out now. You want to ride that trend as long as you can. Trail stop is perfect if you're looking to do a portfolio allocation, but you don't want to get out of a strong runner.
Yeah. And I guess the best part of it is it's hard to make that decision. I trade a lot of options in my personal accounts and other places. And I will say it's really easy to sit there and go, you know what, I'm up 90% in this stock or in this option or something like that. It's just so easy to go, I'm just going to keep letting it run and letting it run. And I've seen a position move, especially if you're doing anything in the options world. It's not unheard of to see a position move 20 or 30% in a day. So you've got to have some pretty wide things, but you also miss out on having a great opportunity to make really good money in your accounts. If you're not making sure you're disciplined about when you're getting out of some of these investments.
Nope, but just for something for people to consider, talk to an advisor. But I will give you a heads up. I believe most of the custodians now do offer trailing stops. Some do not. I know 5, 6 years ago, there were people that said, Ron, why can you do it on your account and I couldn't do it in my personal account? Just because the custodian might not have offered it. And for a lot of retail investors like the Schwabs of the world and whatever, they had E-Trades, they had to offer it to the retail investor because they smartened up. They realized that it's a legitimate strategy that they needed to employ every now and then.
And I think technology had to catch up too, because it's an order that, although it's published to the market, it actually is maintained. Like a lot of other ones are, it's those, let's say a limit order or, stop order or something like that. Those are transmitted directly to the market, and you're out there on the market. The trailing stops are something that's maintained on the broker's books.
Platform.
And so their platform, so they had to catch up with technology and get it.
I know trailing stops have been around at least 18 years, something like
Yeah.
that. Before that, I'm not really sure. Maybe on select platforms, they had the technology to
Mm,
do it, but definitely
yeah.
check with your custodian, talk to your advisor. And again, it's not for everybody, it's not for every position, but certainly with current market conditions, it should be a consideration.
Absolutely. Absolutely. I appreciate you bringing that up today. I hope everybody enjoyed that. We're going to start doing more of these kind of episodes where we bring those type of things in. So we'll announce those ahead of time so that you know about them and you can prepare to watch these shows. You'll also see us break these out as a separate little piece of an episode if you're just wanting to watch those pieces of it. But I encourage you to watch the whole episodes because quite often we're bouncing around some different topics and things like that. So I hope this was helpful. Make sure that you subscribe to the channel so that you're seeing these when they come out. And in addition to that, give us an upvote so that we know you're out there. And we love comments. If you have any kind of a comment or question, make sure you just put it in the comments section and we'll go out there and either reach out to you directly or put the comment out there because probably other people have the same question that you have. So thanks a lot for joining us. We really, truly do these for you. And we will see you guys back here the very next time.